Good morning, and welcome to today's Moss Adams webcast, Navigate Form 6765 Requirements to Claim the R&D Tax Credit. Before we begin, I'm going to play a brief housekeeping video.
Welcome and thanks for joining us. Moss Adams webcasts are designed to help elevate your business performance. Transform your future for the better with advisory solutions tailored to your vision and supported by our collective technical resources. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download a PDF copy of today's slides from the slide deck and handouts widget. You can ask our presenter questions during the webcast by typing a question in the Q&A window and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. As a reminder, the presentation you're about to see is not legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters for Moss Adams, Travis Riley, partner, and Josh Harbin, senior manager. And with that, I will turn it over to Travis to get us started.
Yeah, thank you. So first off, good morning, everyone. Welcome to our quick presentation on the new Form 6765 requirements. Since the 1980s, the R&D credit has provided tax relief to companies that invest in research and development, and the rules and requirements around this continue to evolve. So today we're going to focus on the latest update, the new reporting obligations on Form 6765 for the tax year 2024 and beyond. I think understanding these changes is really critical to meeting IRS requirements and ensuring that your claim is not rejected or disallowed. But before we move on, I just wanted to take a moment to do some introductions. So my name is Travis Riley. I'm a partner in the R&D group here at Moss Adams. And for nearly 20 years now, I've focused exclusively on R&D tax matters. I'm talking to you today over on the West Coast, just outside of Sacramento. And so we have a team here at Moss Adams of nearly 50 dedicated professionals, and we serve clients across all 50 states. So, Josh?
Hello, everyone. Good morning for those of you on the West Coast. My name is Josh Harbin. I'm a senior manager in our R&D tax credit practice. I, too, have exclusively focused on R&D tax credit services my entire career. Been doing it well over a decade now. Also on the West Coast, and looking forward to speaking with you all today.
Great. So given that we have a 30-minute window, what we've done, we've streamlined today's agenda to focus on the essentials of Form 6765. This slide highlights our 4 key areas, and we're going to move efficiently through each one of these to provide a clear understanding of the updates and their implications. So with that, I think we're just going to jump right into it. So, setting the stage, giving you some background here, let's start by talking about how we got to this point. The evolution of the new Form 6765 stretches back many years. Back in 2005, if you look at the IRS audit guide, back then they flagged what they referred to as prepackaged R&D credit submissions. Now, think of these as a package that maybe includes a very high-level calculation and a lot of boilerplate template language without any real detail or substance behind it. Then by 2007, the R&D credit became a tier 1 issue, making it a top priority for the IRS. And then the year after, in 2008, a new audit guide came out, and it stressed this whole concept of nexus, basically linking your qualified research expenses to your specific projects, or what we refer to as business components. So, taxpayers, they submitted claims, many audits followed, and the IRS grew frustrated with the lack of substance that they were seeing on a lot of these examinations. What they really wanted was more consistency and a streamlined process. But yeah, these submissions that they were seeing were really light on specifics, and that sparked a lot of court battles over how much information is actually required, how specific it needs to be. So this led up to the 2021 memo from the Office of Chief Counsel. So our first bullet point here. And this was an internal IRS memo that outlined a legal basis for these enhanced reporting requirements. And what it did is it really demanded key details. So it said you need a list of all business components, the research that was performed, who performed it, and what information each individual sought to discover. Now, this only applied to refund claims, but the IRS also signaled that they didn't believe R&D credits are valid at all without this information. So for years, the IRS has been having discussions about how to roll this out on original tax returns. Then in September 2023, the IRS proposed Form 6765 updates, which required more detail around business components and the expenses. Fast forward to June 2024, and then they published a revised draft that reflected some of the public input, and they relaxed some of the demands by capping the number of business components and exempting smaller companies while keeping the core framework intact. The December 2024 draft and instructions basically finalized these rules, although we expected to see some changes or some tweaks. That didn't occur. Then February 10th, 2025, after tax season started, the official version dropped, and so that's where we're at. And it's effective for 2024 tax years and beyond. They didn't issue any news releases. They just put it out on their website, and that caught a lot of people by surprise. So, yeah, I know that's a lot of background, but I thought that was important to understand what led up to this. But now let's shift gears a little bit and talk about who this impacts.
Thanks, Travis. So let's start with clarifying, who these changes apply to. So first off, the Form 6765 is applicable for any taxpayer claiming the research credit, first of all. However, there are some exceptions for one of the new sections, Section G, relating to business component information. Section G is going to be optional for all filers for tax years beginning before 2025, and will be required for tax years beginning after 2024, unless you're a qualified small business and you check the box to claim a reduced payroll tax credit, or your total qualified research expenses, or QREs, are equal to or less than $1.5 million. And that's determined at the controlled group level. And your gross receipts are equal to or less than $50 million. So the good news here is that we really have a phased approach to these new form requirements, with Section G arguably being the most challenging, and we'll dig into that here shortly, being optional for this first 2024 tax year. So let's dig into what actually changed in the form. And we're going to walk through the form itself and highlight some of the key changes made throughout. So starting at the very top of the form, we have two questions labeled as item A and item B. Item A isn't new. It simply moves the question related to electing the reduced credit under 280C to the very top of the form, rather than having it listed under each calculation method. So this is a very straightforward change. Nothing too controversial about this one. Item B asks whether you are a member of a controlled group or business under common control. Again, this isn't a new concept in the context of computing research credits. We've always considered controlled groups and businesses under common control in terms of how we aggregate costs in the computation and allocate the credit amounts and showing them on a statement. However, for those of you that are members of a controlled group, you're now required to attach a much more extensive statement to the tax return itself. That statement is going to include several different items, and you're going to be required to list this for each member, including items like the entity EIN, the entity name, the principal business activity code. You're going to have to indicate who the designated member of the group is, basically who's kind of leading the charge of the elections, and if you're part of a consolidated group. You're going to show the qualified wages, supplies, computer rental, contract research, and the total QREs, qualified research expenses, for each member. You're also going to show the percentage and portion of the credit for each member and the group totals. You also have to identify the number of controlled group members in the current year and the previous year. And you have to indicate if the qualified research expenses are being claimed as one consolidated controlled group return or if they are filing separate returns. There's also some naming conventions that are very specific for those that are e-filing that you have to follow as well. So again, the whole concept of a controlled group isn't new. Even a statement isn't new, but the extensiveness of the statement itself is something that's a little bit different than what you might have seen in the past. All right, Travis.
All right, so let's take a look and see what changed in Section A. This is the regular credit calculation shown right here on the slide. So the key update is on line 5, where you now report your total qualified research expenses, or your QREs as we call them, from Section F, line 48. That's a new summary section capturing all of your research costs that we're going to go over in just a minute. Now, for most taxpayers, this reflects your individual total. However, if you're a member of a control group and you file a separate tax return, then line 5 has to show the group's full QRE total, not just your share. So this concept actually applies to the entire section. If you're in a control group, then you're reporting this information as it relates to the entire group. Your allocated credit, and this it gets a little bit tricky, goes on line 13. So if you're using tax software, it's probably not going to do this correctly, and it's going to require some overrides, almost guaranteed. Then another change, as Josh noted earlier, the Section 280C election is shifted to the top of the form, leaving this Section A focused on expense reporting and the credit calculation. All right, so moving on to Section B. This is for the alternative simplified credit. So we also call it the ASC. The ASC calculation is shown here with line 20 being highlighted. You know, all of the same concepts that we just discussed in Section A, they also apply here to Section B. So if you're not in a control group, this is going to be pretty straightforward. However, if you are in a control group and you file a separate tax return, then just keep in mind that you report the information for the entire group in this section. And then what you're going to do is you're going to report your allocated share of the credit on line 26, which is going to require some overrides. Again, the 280C election is gone from this section. It's been moved up to the top of the form. But the ASC, the actual election process itself, remains unchanged. All right, moving on to Section D. Now, this is the Qualified Small Business Payroll Tax Credit election. Box 33B, which is highlighted here. This is a new checkbox that you mark if the payroll tax credit will be reported under a different employer identification number than the one filing the actual return. Why is this relevant? Well, it could be relevant if you are in a control group where maybe one member reports the payroll taxes for others under a different EIN. But probably where we see it the most is when a company is using a PEO, which is a professional employer organization, because they file taxes, payroll taxes, under its own EIN number. Now, if you look at this, it's mostly the same. The maximum credit, it's still $500,000. It's entered on line 34, rolls up from line 28, with line 36 feeding into the form 8974 for the payroll offset. These aren't significant changes to Section D. Why was it done? It could have been done to help with the IRS's review of payroll credits, which we're seeing some of, and especially if they're being claimed on the form 941 of your PEO. For a lot of stories of PEOs being audited.
All right, moving on to Section E. So this is a brand new section with all new questions. The instructions tell us to complete Section E to provide additional details about the QREs reported in Section F. So we'll get to Section F here in just a second. But Section F is essentially looking at the QREs for the actual member of the control group, not the entire control group. So when we're looking at Section E, generally it would follow that we're looking at the member of the group, but it doesn't specifically call that out in the instructions. So looking at the questions, first off, we have line 37, which asks you to provide the number of business components generating QREs on line 5 or line 20. Remember that line 5 or line 20 reports the entire control group QREs, not just the members. However, if you were to look in the instructions, line 37 refers to the QREs on line 48, which would be the separately filing member. So there is some contradiction here between the actual line on the form and the instructions itself that hopefully will get clarified in some subsequent iterations of the form. For those wondering, a business component is essentially a term of art for the research credit. That means your R&D project. It can be a product, a process, software technique, formula invention that's held for sale, lease or license, or used within your business. Moving on to line 38. This asks for information about officer wages that are included in the wage QREs. The instructions do repeatedly refer to officer wages in the corporate context and refer to the laws of the state in which the entity is incorporated to determine how an officer is defined. Line 39 asks a yes/no question as to whether you acquired or disposed of any major portion of a trade or business in the year. However, it's again slightly misleading because if you look at the instructions, you would only answer yes if there are QREs reported on line 48 related to an acquisition or disposition. Otherwise, you would check no. Line 40 looks to see whether you included any new categories of expenses in QREs. However, there's again no definition of what new categories means, and it's likely going to lead to some inconsistencies between taxpayers. The instructions refer to making base adjustments for new categories, so it seems like they would be looking to ask that question really and really intending to find those base adjustment requirements. But you could be including a new category of expenses, depending on how you define it, that didn't exist in prior years that wouldn't have required a base adjustment. So again, hoping to get a little bit more clarity on what this specifically means and how we're defining new categories. Line 41 is, again, another yes/no question, looking at whether you used the ASC 730 directive methodology to determine QREs, and including the amount there, if you did answer that. Moving on to section F. This is now where you're going to report the qualified research expenses by the different types. So the wages, supplies, contract research, computer rental, lease, what used to be under each individual computation method that Travis had gone through before. Now we have a specific section where those are going to come through for the separately filing members. We also, at the top of that section, have the question of whether section G is required or not. And just as a reminder, no one is required for tax years beginning before 2025. Again, group members filing any separate returns, we would only be reporting your QREs on this section, not the entire combined group QREs for this. All right, Travis, back to you.
All right, so let's talk about the new section G. That's where a lot of the significant reporting requirements that come into play. Now, as Josh mentioned, this is optional for 2024 tax years, but mandatory in 2025 for the majority of taxpayers. There are exceptions. Exceptions for small businesses with QREs less than 1.5 million and gross receipts below 50 million. Also an exception for taxpayers that are electing a payroll credit over in section D. Even if you qualify for one of these exemptions, please don't overlook this preparation. We see audits that target smaller credits as well, and lacking this information could lead the IRS to entirely reject or disallow your claim. The core of section G is this: you must report at least 80% of your total QREs, but you're limited to listing 50 business components. You have to rank them by QREs in descending order, focusing on your most significant research projects. Anything beyond the top 50 will get aggregated, and then it gets reported at the bottom as aggregate BCs in column 49C. What's in these columns? Column 49C requires a specific name or number for each business component. So, a pitfall here: generic terms like process improvements or preclinical research, that doesn't work. 49D asks for the business component type. You have to be specific. Is it a product, process, software, formula, technique, or invention? If it's software, column 49E wants the software type. And this is key for internal use software projects, which have stricter rules that you have to meet to qualify. 49F is only needed for amended returns or refund claims. And that's a relief from the IRS. They dialed this back from the original draft, the original plan. So why do you need to report all this detail? The IRS is likely targeting risk areas. So think control groups that might be miscalculating credits, or taxpayers with unclarity about their business components. All right, there's another part to section G. So we have columns 50 through 56. So this is where your expenses must be reported by project. And I'm using the terms project and business component interchangeably here. If you use time surveys, you might already split out the direct research, supervision, and support. And if you're doing that, that could really match this setup pretty well. Companies that have detailed project tracking, on the other hand, they could struggle more with this because they don't actually track time in this way. They might log hours to projects, but they don't do it by role. And actually, I think this is a little bit ironic considering that the IRS has historically pushed really hard for accurate project tracking. But now, I mean, you're likely going to need to do some kind of survey on top of that just to match this format. Where is this all coming from? This could be tied to the little Sandy Cole case. We're not going to get into all those specifics, but that's where the tax court counted only direct research wages for the 80% substantially all rule. The Seventh Circuit overturned that, but we have seen the IRS stick with the original tax court's view outside of for taxpayers that are outside the Seventh Circuit. Still, these columns here, they don't align perfectly with the Sandy Cole math. If you are familiar with that case, for example, contract research isn't broken down in the same way as wages, but a project with a lot of direct supervision or a lot of direct support expenses, realistically, that could raise red flags with the IRS.
All right, so Travis kind of already covered this part, so we'll just briefly reiterate it. But if Section G is required, you don't have to report all of the business components in detail, but you do need to complete it for at least 80% of your total queries, but not more than 50 business components. And if you are a member of a controlled group and file separate returns, you would be doing this reporting specifically for your business components. So you would have your own separate test for 80% up to 50 business components. Moving on to the next slide. For those of you that do follow the ASC 730 directive, you will make a single entry in Section G for the amount reported on line 41 that was up in Section E earlier. If that single entry is at least 80% of your total queries, you don't have to report any additional business components. Otherwise, you would be reporting additional business components to meet that 80% top 50 requirement. And if you used a statistical sampling methodology in accordance with Rev Proc 2011-42 to determine your queries, you're still going to have to report the same 80% top 50 business components as explained above, irrespective of which business components are used in your stat sample. So even if you have sample units selected, you still might have to be looking at other business components that aren't one of your sample units to fulfill the requirements of Section G.
All right, so we're going to wrap up here. Where do we go from here? So the IRS, they released these updates on Form 6765 on February 10th without a press release. Very quietly, caught many people off guard, including tax providers who might be unaware of all these changes. Nearly every section now demands your attention. Sections A and B shift QRE reporting to the new Section F. Section D adds an EIN checkbox for payroll credits. Section E, brand new, requires specifics like officer wages and the number of business components. Now, as we mentioned a few times now, Section G is optional for 2024, but mandatory for 2025, unless your QREs are under 1.5 million and your gross receipts are below 50 million, or if you're electing a payroll tax credit. Now, these changes, they're going to impact your 2024 reporting. I think it's really important that you reach out to your tax preparer, or if you have R&D providers, just to confirm that they're aware of these updates and that you have all of the necessary details and the documentation in place to comply with Section G, even if you're not required to report it yet. So I think that's important because if you think that you're still a ways off from being able to report this information, now is really the right time to put a plan in place. Additionally, if you have any feedback on the form, please submit your comments by June 30th this summer. I will say the IRS does read your comments. They take them seriously. They read them, and they potentially could factor those in to any improvements on the form going forward. All right. With that, we have a quick polling question.
Awesome. Would you be open to learning more about how Moss Adams can assist your company with R&D credits and other valuable tax incentives? I'll give everyone a few moments to respond here. And to participate, please click the button next to the answer you choose and hit submit. Everyone, a couple moments to respond here. And for
While
those
that's
of you
happening,
that
I will say I see a lot of really good questions coming through in the chat. And because we're out of time here, we will follow up and make sure we get all those questions answered.
Awesome.
Great.
Thank you, Travis and Josh, for a great presentation today. If we didn't have time to answer your questions, we will do our best to follow up with you after the webcast. Here's a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey, as your feedback is very important to us. Please also visit mossadams.com for future webcasts and other resources to help elevate our performance upward. Thank you for joining us, and we hope you'll join us again next time.
Thanks, everyone.
Thank you.